So here I'm gonna be doing another market recap, and at the end I'm gonna do a trade review. Um. Okay. So here we are on the daily chart. We've been drawing towards this buy side liquidity up here, or I guess you could call it relatively equal highs up here. Um. So that could be the draw on liquidity. I don't think we're gonna hit that this week. Um, but definitely next week, midweek maybe. Um, or it could just fly right through that tomorrow or Friday. But I'm expecting kind of a retracement on Friday if we keep going up. Right now, okay, we're dropped down to the 4-hour chart. So we've kind of been rallying for the past, ever since Sunday open, we've just been rallying. And we do have these fair value gaps that are still untouched. So that's why I'm kind of like want to see a rebalance before we take out this buy side. That would make the most sense to me. We're definitely not going to come back down here for a little while. We have this BISI. We barely touched into that too. So, and actually, we have this sell side right here, which could be a target for maybe tomorrow. If you come left, there's that buy side. We do have these 5 up close candles, and then we had a big move down. And that, once this candle closed right here, this big bearish candle closed below this candle, that validated all of these candles to be a bearish order block. Let's make this a little lighter color. There we go. So that's a 4-hour bearish order block. Let's drag this to the right. So we got to the midpoint, which is mean threshold. It's not consequent encroachment. Consequent encroachment is the midpoint of gaps. An order block and a breaker block are not gaps. So the midpoints mean threshold on order blocks and breaker blocks. So we came up, we closed above mean threshold of that order block, which is a good sign for a bullish price to keep running. But then on Wednesday we had a down closed candle that closed actually below this order block. And then today we kind of came back up into it. I'm just going to drop the fib on this because I want to see which I want to see if it closed below the first quadrant. Wow. Pretty much to the tick. It closed right at that first quadrant. So after seeing this, I'm kind of expecting price. Where's the tool? Give me a minute. Oh, here we go. Or isn't it called path? Alright. I'm kind of expecting something like this to the midpoint of this fair value gap maybe, and then higher. And then maybe come back to the midpoint of this, and then go for this sell side right here. So maybe a little bit of retracement. But one thing to keep in mind is that if we do close below this midpoint, expect price to come down to at least here, and if we can get below that, then this bullish BISI is in play. But I'm really not expecting too much downside. We could rebalance to the midpoint of the range, which is right here. I know my chart's getting kind of busy. The midpoint, probably next week, unless we have some crazy news that comes out, but probably not. So definitely looking for higher prices with a little bit of a retrace tomorrow and into Friday. And then maybe at the beginning of next week, hit this buy side. Because that's going to be all-time highs after we hit this. So if we hit this, then we're probably going to hit this because they're relatively equal. So that's the 4-hour. And you can see all these new day opening gaps and new week opening gaps are all below the market, or below price. So we can definitely expect the market to draw to some of these levels. So gonna be moving. Let me get rid of this stuff real quick. I'm gonna keep this fair value gap on the chart and this sell side because I think that's what's gonna happen tomorrow. 1 hour chart. Let's see here. I really like the fact that we closed right at that first quadrant because we had a nice little push up and then we came down and tapped to this fair value gap. But we didn't hit the sell side, which I think is definitely gonna be an option, like I said, going into later this week. Nothing really crazy on the 1 hour. There's gonna be some fair value gaps on all the way to the left over here. Yeah, we got a ton of them. So that order block is actually in 2 of these fair value gaps. I think price might have actually hit the top of this fair value gap to the tick. We're gonna make it thick in a different color just so I know what I'm looking at. So we bumped into that upper fair value gap on the 1 hour chart, and then we rejected. So, and then we inversed the other ones below that. And if we come back to the 4 hour, so we're at the first quadrant of that order block I mentioned earlier. Let me just measure this. So we did close above the consequent encroachment of that candle, which is interesting. I'll have to drop down into the 15-minute. Let's see what's going on here. So we had these relatively equal highs this morning. Of this because my recording software stopped recording midway through the last one, so I'm going to try to make this one a little quicker because the last one was pretty lengthy. Maybe I'll try to merge the two together. Now that I think of it. Yeah, I'm going to do that actually. So I'll pick up where I left off. So right here, this was the candle today. Today 10 a.m. 10 a.m. to 2 p.m. we had this big down close candle, which to me signaled that we will probably continue lower to retrace all of these unbalanced fair value gaps. And we also have the sell side, even though we do have a higher time frame buy side above, I think we'll see a little bit of a retrace, at least down to this midpoint of this BISI. Because we are in that, we closed below that bearish order block, and then we closed right at the first quadrant of that bearish order block. So to me, we could come down to this, come back up, take out this buy side, run this buy side actually, close above this or bearish order block, come back down to the mean threshold of it, and then run this buy side. That's my analysis for the end of the week to the beginning of next week. So I will now go over the trade that I took. So this morning we had a run up. We gapped up this morning. You can, if you go to regular trading hours at the bottom right, toggle that on, you can see that the close at 4:14 to the open at 9:30, that is your opening range gap. Now, whenever we gap up, I'm initially bearish because I want to see it come back into that gap and hit at least the midpoint. And then if it's going to reverse, I would like to see it hit the midpoint, then bounce. Or hit the midpoint, go a little bit over the midpoint, and then reverse. So that's my narrative that I had today. I wanted to see this midpoint of this opening range gap hit, which we did. So this morning I was watching the market open. This 9:30 candle, we came up. We were kind of wicking. We pushed up. Then we hit the hourly fair value gap to the left. And then we came down into this opening range gap. So let me turn my executions on. So initially, I went short in this bearish fair value gap, but I ended up getting stopped out because we're going to rebalance the first presented fair value gap. This first presented fair value gap is there. You will find so many trade opportunities from it. It's actually like one of the most important. Not important. Well, it is important. Everything is important in trading. But It's one of the most useful PD arrays I've implemented in my trading. So I saw this first presented fair value gap, and these first presented fair value gaps aren't just good one-time uses. They're good for a week. So I keep them on my chart. At the end of the week or at the end of the day, I'll go in there and put the date. Today was 6/25, so I know what day it was. So that's the. So I'll keep that on my chart for 5 days, and then I'll delete it, and then I'll continuously have 5 on my chart. So we came up to this, and I went short again, pretty much right at, missed the top of that wick by like 5 ticks or something. But came down, and then I was watching how he reacted off the top of this opening range gap. So I went short 4, sold 2 on the way down, and then I sold 1 more, and I put my stop at break even and let the last one run, and I sold the last one over here. So I was watching how the bodies reacted, right? So when I sold one here, I noticed that it was wicking into the opening range gap, but the bodies weren't closing inside of it. So I was like, okay, it might not want to go down anymore. It doesn't want to dip into that anymore. And we started reversing, and I was watching these PD arrays, and for me, since I was bearish, once 3 bearish PD arrays get disrespected, I just close the trade because we're probably 9 times out of 10 going to keep going higher. So we came up, then we sold off again, and I thought about selling my last contract, but I really wanted to see the midpoint hit. It was pretty much guaranteed that we were going to hit this. If we come down here, we're going to hit it at some point. So I held on to it, and then I put my stop up here because I thought to myself, well, might as well secure some profits instead of just break even in this trade. So I put my stop right at the top of this, I think, or right here at the midpoint actually. But we swept this liquidity, and then we moved down, and it was pretty aggressive move down too. And then we formed this sell side imbalance, buy side inefficiency, and this is where I alerted my trade to the Discord. I went short here, and I was watching how the bodies respected the midpoint. It was good. Then we closed above it, and then I saw this bearish order block, and then I said to myself, if we go above this bearish order block, I'm going to stop out. So I was in drawdown for quite a few minutes. 1, 2, 3, 4, 5, 6, 7, 8. About 8 minutes I was in drawdown. It wasn't too bad. 22,490, and so the maximum I was down was 12 points. So we came up, hit the order block to the tick, and we sold off. Sold one, I'm pretty sure at the consequent encroachment of this. Yeah, consequent encroachment of that wick, pretty much. Sold one. Held the other one to my full TP. And then that was it for me, pretty much for the day. And then I saw this little scalp here. But that's nothing of importance. So, reason I took this trade, let's go over it once more. Buy side was taken, displacement down, creating a market structure shift right here. I'll turn my executions off so you can see it better. Shift in market structure with displacement down. We rallied back up. We hit this order block. And then we sold off, taking out the AM low, New York AM session low, and we eventually went to full gap closure. And then a little bit lower, hit the new day opening gap from today, actually, from the Asia session. From the close, the new day opening gap is the close at 5 o'clock to the open at 6 o'clock. That's the new day opening gap. The opening range gap is the close at 4:14 to the open at 9:30, which is this shade area. So that'll be it for this market review and trade review. I'll probably be going live more consistently. I've been on a good streak, and I just want to share this information with you guys to help you guys learn and grow as a trader.